The Australian Financial Review.
Hello, I'm James Thomson, Chanticleer columnist and host of the Chanticleer podcast. Today we've got something very special for you. As you know, last week we bid a fond farewell to Tony Boyd after a stellar career covering business, finance and markets for more than 40 years. And as promised, we've got him back just 1 week later for this special Easter edition. What makes this episode so special is that Tony will be sitting down and chatting with another legend in the finance industry, John Sevior, the co-founder of Airlie Funds Management, who is widely considered to be one of the most successful fundies in Australia, and who also announced his retirement a few months ago. Both Tony and John started their careers at about the same time. John would go on to become one of Australia's most respected investors, while Tony, of course, rose to the peak of business journalism. This is a chat that you don't want to miss. Tony and John look back on their 40 years in the Australian market, sharing their insights, their highs and lows, the lessons they've learnt along the way, and even a few secrets. This episode was recorded a few weeks ago. We hope you enjoy it as much as we did.
Well, good morning, John, and welcome to the Chanticleer podcast. Seeing we're both retiring, this is the perfect opportunity for us to look back over our careers, see some of the lessons learned and maybe pass them on to the listeners. We can both interview each other and that'll take us back to the days when you were a journalist at the Sydney Morning Herald. So welcome and let's have some fun.
Thanks, Tony. Great to be here and hopefully we've got something worth listening to.
Yes, well, I've gone through your sort of CV, which is pretty impressive, and let's start in 1983. That's when I started my career as a business journalist, and I wondered if you could just talk about the first place you worked, which was, I believe, a broking firm in Melbourne called Davies and Dalziel. How did you get that job and what attracted you to stockbroking?
Well, it was expediency, really. I'd inherited a small share portfolio from my mother when I turned 21. She was a very keen horse punter and also a very keen investor in the share market. So she had died and I inherited her share portfolio. So I'd graduated from university. I thought I know nothing about the stock market. And fortuitously, a friend of mine had had a holiday internship at D&D. And he said, well, why don't you take my job? And I said, well, it's probably not yours to offer. But I went through a process and I got the job at D&D and that was an incredibly formative experience.
And of course, those were the days when the Melbourne Stock Exchange was an open outcry system and people yelled out which shares to buy and sell. I mean, what was your job at the broker?
Look, I was an absolute odd job guy. I used to run the orders out to the operators on the floor of the exchange, but I got the pink notes and the blue notes confused. They're the buy and sell notes, so they moved me upstairs to...
Sounds like a great start.
It was a great start. I worked in the script department, so settling people's trades, and in the days when it was T plus 2 weeks settlement. And then I ended up in the research department and I was very lucky to be very well instructed in fundamental research by a couple of very seasoned analysts and that's really where I fell in love with the stock market.
I can really relate to that whole idea about being a gopher because I started at the Daily Telegraph as a copy boy and I had to do that for 14 months. Basically answering the call, copy, and sending the edited text down to the stone where it was sort of set up by the printing unions and then put in the paper. So I certainly do relate to that.
Now, that was the starting place for most journalists in those days, wasn't it?
Yeah, it was.
On the ground floor. What about you, Tony? You were a finance journalist for 40 years. Tell me how you ended up starting as a reporter in the Melbourne office of The Australian.
Yeah, well, look, I got transferred to Melbourne as the Daily Telegraph correspondent, which, being the Daily Telegraph of Sydney, I barely got any coverage at all. I think the two biggest stories I got were the beer strike at Carlton United Breweries and also the BLF being prosecuted for corruption. But I was down there and they were holding me back on my cadetship, moving up to a D grade journalist because my shorthand speed wasn't there. And I saw this opportunity when the Australian newspaper sacked most of their finance staff in Melbourne and they needed to rebuild. And I got the deal that, okay, you don't have to pass your shorthand. We'll give you a D-grade journalist and you can work in the finance section. And it was great, actually. I had a very good boss in Don Kirkwood who had a roll gold contact list and he loved long lunches. So I learned a lot from him.
And that was par for the course, wasn't it, in those days?
It was, yeah. Look, I mean, there was probably too many long lunches down in Melbourne, and the best one of all was we went to this restaurant downstairs in a basement area, and there was this dust storm that came in from the western parts of Victoria that absolutely covered Melbourne. It was pitch black. It was the biggest sort of natural peril, an environmental story that had happened in Melbourne in 20 years. And I got back to the office and Sydney's ringing me saying, what about the dust storm? And I knew nothing about it. I was in the basement restaurant for about 3 hours. Anyway, it was a good place to learn about finance or journalism. But can I just ask you, I believe you left stockbroking and worked at the Victorian Liberal Party. Now, I never thought of you as a political animal, John. What was behind that?
Well, I don't think of myself as a political animal, nor did I then. I'm a genuine swinging voter, but I was very curious about the spectacle or the theatre of politics. And a mate of mine was the chairman of the local branch of the Liberal Party, and there was a state election coming up in 6 weeks, and he needed a candidate. And I happened to be going overseas in 7 weeks' time, so I thought, well, I'm happy to do it. It might be a bit of fun, and it was a terrific experience. And after that election, I worked for the Liberal Party for about a year in another gopher role, doing all sorts of tasks from writing letters to the editor to research to just general field work.
And so you could have been what, the member for who, for which?
Richmond in inner city Melbourne. And I think it's been a Labor stronghold until I think the most recent election when the Greens won the seat of Richmond. But I was never in a million years going to win that seat.
I see, right. And what about today? Are you still a member of the Liberal Party, or do you where do you sort of
No,
land?
I don't think I was even a member of the Liberal Party then. I was as I say, interested in politics. Here was an opportunity to just roll the dice and have a bit of fun and hopefully learn something, and it was just one of those opportunities that presented itself. So, yes, that was 1985 election into 1986 working for the Liberal Party. But 1986 was obviously a big year for both of us because the Australians sent you to London as their European finance correspondent. And what were the most memorable moments?
Well, it was interesting, John. While I was in London, there was the boom in the Buccaneers, the Mavericks, the entrepreneurs, the Australian highly leveraged investors who made millions for themselves before most of them went bust. So I spent a lot of time in London chasing around Alan Bond, John Elliott, who tried to buy a brewery over there, Robert Holmes à Court, who managed to buy a whole bunch of theatres off Sir Lou Grade. There's some really interesting stuff, but I suppose one of the more memorable and shortest interviews I had was I found out Kerry Packer was staying at the Savoy Hotel and was in London doing some business. And
probably with Jimmy Goldsmith.
Well, look, I think he bought that casino over there, so he had a good reason to be in London. Anyway, I called a reception at the Savoy, not expecting to get through to his room, but I said, "Can I speak to Mr. Packer?" And I was put through to his room, and as soon as I'd said my name and I was from the Australian newspaper, he gave me 2 words, F off, and hung up. So shortest interview in my career, John, but at least I got through to the guy. And since then I have interviewed his son, James Packer, many times, although not recently. And he's always been a perfect gentleman.
More expansive than his dad.
Yeah, definitely. So, of course, while I was in London, your love affair with politics didn't last long. You were back in broking, working for that blue blood Melbourne firm Potter Partners. How did you get that job, and what was it like being in one of the bastions of broking and financial innovation in Australia at the time?
I can't remember how I got the job, but I realised quite quickly that politics wasn't for me, and I'd really fallen in love with the stock market and investing from my early experience at at D&D, and so when I came back from overseas, I thought this is the game for me, and I got a job at Potter Partners in the private client department, so advising retail investors on stocks. And at D&D, I was very fortunate to work with a team of very seasoned advisors from whom I learned a lot. I was the youngest in the team by a mile, and it was great to sit at the feet of all these experienced advisors. And it was there that I worked through the 1987 crash, where the market fell 25% in a day. I know, hard to believe, but it did. And I learned a lot about fear and greed in that time at working with private clients.
Sounds good. Actually, at that time, I was in London on two really big stories. The Murdoch's shift to Wapping, which was quite amazing. And also I had my own experience of the 1987 stock market crash. I'd told the office that I was going to go on a long holiday and that I was leaving and they needed to have a replacement ready. But of course, the bureaucracy at News Corp didn't sort of come to the party. And so when the 87 stock market crash happened, I was on a ferry to Ireland with my wife and couldn't make any contributions. So I probably missed the biggest story of my life doing that, John, but it was interesting. And then, of course, the move to Wapping was absolutely profound in terms of what it did to the economics of newspapers, because Murdoch managed to, I think he changed out 3,000 or 4,000 printing union employees for half that number of electricians union members, and that really made the profitability of News Corp so much greater, which funded his expansion, Murdoch's expansion into America.
Were you, were you on the picket lines at Wapping?
No, I wasn't. I was down a little office in Bouverie Street, just off Fleet Street, which I found out later had been a staging post for some of the Australian journalists who'd come over to help Murdoch set up the whole situation at Wapping, particularly a guy called Alan Howe, who now writes obituaries at The Australian. But yeah, I just sort of watched it from a distance, and it was quite brutal. Every Saturday night, the police were down there on horses and the printing unions were trying to stop the trucks come out with the papers. But the papers all eventually got delivered and the protests went away, and the world, was a very different place, which much higher levels of technology used in newspapers.
Mm. Wapping was momentous, as was the 87 crash, and unfortunately you were in the wrong place at the wrong time through no fault of your own. What did those experiences teach you about journalism?
Well, it's one of the absolute truths of journalism is that if you're in the right place at the right time, you're going to get the big stories. And I'm afraid I missed the 87 crash. And of course, the whole Wapping move was happening right under my nose in the same office, but the bureau chief, Murray Hedgecoe, kept it all very sort of secret. So I sort of got onto the story after it had happened, but it was a mammoth story. Yeah, so interesting.
So Tony, you returned to Australia in 1988, which was a pivotal year in your career. Up until now, I seem to be the one changing jobs pretty regularly. Tell us why you left The Australian and where did you go?
Well, yeah, I came back from London and discovered my first pay packet that I was paid less than when I left. And I thought, wow, I've just worked like 6 days a week for 2.5 years. What's going on? The editor didn't have a hell of a lot of sympathy, and so I started to look for another job. Managed to get an interview with Alan Kohler, who was the editor of the Fin Review, had a nice coffee with him in a dingy cafe down near Central Station, and I took the job. But of course, by the time I left the Oz and got to the Fin Review, Kohler himself had left the Fin Review because he'd gone through a sort of failed attempt to buy the paper with the help of Robert Holmes à Court. So there's another one of those 1980s entrepreneurs again. But
I'd totally forgotten that story.
Yes, no, well, it's an interesting story because Kohler sort of followed Holmes à Court around the world and came back to Australia from London on his jet in the hope of doing a deal to buy the Fin Review, but it never happened. But while I was doing that, of course, you were there at Potter Warburg in London. How did you end up over there, and was there much demand for Australian broking skills in the City of London?
Well, there might have been demand for Australian broking skills, but sadly, there weren't the skills that I offered in the end. But I had worked in private clients, and being an ambitious young punk, I wanted to move to the institutional desk where the big deals are done. And I got a transfer. Potters had sold half the business to SG Warburg, the storied European investment bank, as part of the Big Bang deregulation of financial markets in the UK. So I joined a dealing desk, I think, of about 6 or 8 salespeople selling Australian shares to European investors. I think those dealing desks would be 1 or 2 at most. So there was demand and a lot of service. And I realised then that as much as I love the stock market, I wasn't a great salesman. That was a short-lived period at Potter Warburg, a year or so working in London. A great cultural, social experience, but it was I recognised reasonably quickly that I wasn't cut out for that role.
And did you come across Phil Beard? Because when I was in London, he was the go-to man. He was the top broker for Aussie stocks.
Only by reputation, and I think he had a journalist background. He was a journalistic background as well. But no, I didn't actually come across him. But his reputation certainly was very good. So you're back in Australia at the Fin. Very good timing in this case, because the 1990s recession was an incredibly busy period for you. What were some of the biggest stories that you covered during that time, and what lessons did you take from them for investors, from those full range of corporate experiences, from disasters to the big winners?
Well, John, it was amazing. I worked my way through the company section of the Fin Review and then became the banking editor. And the top stories that I covered at the time were, Westpac's $1.66 billion half-year loss in May 92, the collapse of the estate mortgage unit trust. I mean, that was a doozy. Basically, the people there were selling mortgage securities allegedly on income-producing properties, but they discovered they were actually just holes in the ground. So that was a complete fraud. There was a liquidity crisis in property trusts. That was fascinating because the regulators really had to jump in and back up those funds, which couldn't meet the redemptions that were flooding in as people suddenly thought, gee, the property values are not what we think they are, which sort of has echoes today when you look at the discounts to net tangible assets of the real estate investment trusts. And just to top it off, there are a couple of bank failures too. The State Bank of Victoria, brought down by a merchant banking arm called Tricontinental. And then the State Bank of South Australia. Wow, now that was a real disaster. Those guys would lend on anything for very little credit sort of protection. So yeah, it was an interesting time. And I suppose one of the lessons I took away from all that was that Australians have a propensity to get caught up in booms and busts, but we also, for some reason, are suckers for financial products offering returns that are just too good to be true. I don't know why, but we're too scared to ask the question: how does this cash flow work? Where does it come from? And the number of scams that Australians are getting caught with now shows that we really do need to work hard on financial literacy.
I guess it comes back to sort of human behaviour, doesn't it? Fear and greed is a big influences.
Yeah.
And out of that, the rubble of the 1990s recession and all the sort of corporate collapses, is there a sort of positive story you could highlight of someone who you thought emerged with an enhanced reputation, who came out the other side having salvaged a success from the wreckage?
Yes, look, probably the most successful banker at that time was Bob Joss, an American who came out here to in February 1993 to basically rescue Westpac. And it was actually an amazing turnaround story. He brought a whole lot of American disciplines in credit management and also the consumer banking side of it, handed over a very pristine bank to David Morgan, who then took it on to even greater heights. But I suppose the point about that was that the recovery in Westpac was really rapid and quite extraordinary. I remember going on a program, Late Line, and being interviewed by Kerry O'Brien, and he asked me, how long is this property crash going to last that's caused all these losses at Westpac? And I'd been talking to the CFO of Westpac that day, Derek Hayward, and he'd told me, oh, Tony, this will take 10 years to clear out. So I repeated that statement on the TV with great confidence. But of course, the whole commercial property disaster was cleared out within 2.5 years. So it is quite amazing how quickly an economy can bounce back from disaster when people see value.
I remember Bob Joss having a couple of meetings with him, and he was such a clear thinker. He had such a simple game plan, better, faster, cheaper, and he did a terrific job there.
Of course, one of the big corporate collapses from that recession of the 90s was John Fairfax and Sons. And here we are, we're both working at the same company because you joined the Sydney Morning Herald and the Age business section in 1989. I mean, this is pretty incredible. I mean, I think you're on your 4th or 5th job by now.
Yes, yeah.
So what prompted the switch to journalism? And also, can you give us your first-hand impressions of young Warwick as he tried to run Fairfax into the ground?
Look, I'd left institutional broking in London with my tail between my legs, and I thought, well, okay, I've tried a few things, what else interests me? And I've always been a voracious reader of newspapers. I thought, well, I'll try my hand at journalism, and I was very lucky to get a job at the Age newspaper. I'd convinced them I could parlay my experience as a stockbroker into financial journalism, and that was a terrific place to start working with people like Stephen Bartholomew's and Gideon Haigh. It was a great place
they're
to
both
work.
really good writers, aren't they? Good people to learn from.
Terrific, and really, incredibly passionate about their work and about the subject. And then I think in my time at David Symes / Fairfax, including the receivership, that there could have been, in 5 years, there could have been 4 or 5 CEOs, including the administrator.
Des Nichol, yes.
Des Nichol, yes. At one, that was probably the low point where the cost cutting became so extreme that I was sharing a terminal a half day each with a fellow journalist in the business section as a cost-saving measure. So I don't think I ever saw Warwick in the office, but I guess the lesson was it's pretty hard to run any business as an absentee landlord. Throw in a bit of leverage, and that's not a great cocktail. Tony, your next big career move was to be the Tokyo correspondent for the AFR in 1996, and you took a young family to Japan. Tell us about that experience.
Well, that was fantastic. That was the days when foreign correspondents had rolled gold treatment, a beautiful house in Shibuya, help with, some of the things of life like school fees. But, it was wonderful to have a young family and be able to take all these holidays around Japan and, experience the full Japanese cultural sort of heights, which it's a magnificent country, and I would recommend anyone go there, especially the Fuji Goko, which is those 5 lakes around Mount Fuji. It's beautiful at any time of the year. But as far as journalism goes, fantastic experience because Japan was still going through its fallout from the property crash of 1989, and it led to a whole lot of other companies going broke in stockbroking and banking, and there was just so many stories to write. It was quite a good experience as a journalist.
And as a Westerner, how easy was it to build a network in Japan?
Phenomenally hard, John. To get an interview with a big company was 3 to 4 months' work, and I've been talking to my colleague Michael Smith, who is in Japan now covering North Asia. And he told me that it can take him 5 months to get an interview with a big company. So Japan hasn't changed that much in terms of its openness to journalism, but it still remains one of the big stories of the world, as we have so many different issues in trade and geopolitics. On that note, John, let's take a break. And when we come back, let's talk about that pivotal shift in your career in funds management. So, of course, while I was over there in Shibuya, you were settling into another new job at Perpetual Investments. Now,
I think we're up to about 6 at this stage.
Yes.
But who's counting?
But this is interesting. This is serious funds management, isn't it? This is you really bedding down for the remainder of your working life. So tell us how did you get that job, and did you have to start in the back office all over again, or?
Fortunately not, but not far off it. Look, as a journalist, I used to speak to lots of different fund managers trying to source stories, and the guys at Perpetual really stood out as being not only very successful, but as people very grounded, very open to a conversation. They stood alone, not just in performance, but in the way they handled themselves in an industry that was full of a lot of bigger egos than performance might have warranted. The Perpetual guys were great, and I loved their sort of common sense approach to investing. So,
yeah, can you just give us that in a nutshell? What was the investment philosophy?
Look, the investment philosophy was born out of the 87 crash, rolling into the recession and the string of collapses that caused. It's rooted in financial conservatism, that you don't invest in companies, or you look to invest in companies that are lowly geared, that they're businesses that you can understand, they've got a defined market position, and the management that were trustworthy. I mean, all of these are pretty basic principles of all the good investors everywhere in the world over time, but these guys practiced it with great discipline.
And just as a sort of example, in those early days, did you have a mentor at Perpetual, and did he help you to pick the stocks that did well? Or
look, it was really a team effort, and I think that's one of the observations I'd make at many fund managers. Often there's a, inverted commas, star stock picker that's celebrated, but many people contributed to the performance at Perpetual then and all the way through. But the two guys running the business, Pete Morgan and John Murray, they complemented each other really well. They were no-nonsense guys, and they were true to label. And they took the job seriously, but they didn't take themselves seriously. So we had a lot of fun, but we were very competitive on the field.
Mm-hmm. And did you bring your own separate sort of style to all this? I know from having talked to you before that you really place a lot of emphasis on the people running companies. Is that something that you brought that made you different at Perpetual?
Well, I'd been investing myself, 21, 31, 10 years, and I'd call my investment style eclectic, but the outcomes were quite similar to the sort of portfolios Perpetual had. Obviously, I got a bit of access as a journalist to company management, but it's a different level of interaction with management when you're actually a professional fund manager. So I guess I brought some insight there, but they had their own method, they had their own insights, they had their own access, and I was really there to absorb all of that and I guess sort of define or codify my own investment style a bit better. And they were terrific people to learn from. Tony, you obviously had a very exciting and interesting time in Tokyo. What did you do when you got back to Australia?
Well, the editor, Glenn Burge, asked me to be global markets editor, and I really enjoyed that because that took me through that period of the dot-com crash. And I learned a lot in that job because when you're in markets every day and you're following bonds and equities and fixed interest and the currency, you start to get a good feel for what's going on in the world. And I didn't find it surprising that there was an IT dot-com crash because everything was pointing to that. And for me, the turning point was the Barron's magazine in New York published a list of the cash burn rates of the top technology companies at the time. And it was a list that showed that they would all run out of cash within 12 to 18 months. And
That was prophetic.
It was, because as soon as that happened, people started to rethink these businesses, and because people thought the business model has changed. This is a new paradigm. But of course, what we discovered, it hadn't at all. And cash was still king, and you had to make profits. And we're seeing a bit of that today. So that was a good experience. And then when he asked me to be IoT editor, I thought, yeah, why not? I'll try writing about technology. And that was an enjoyable period. And the biggest lesson I learned from that was the way in which enterprise resource planning projects could blow up, and how companies went out of their way to hide them. And it was quite a sort of prescient thing to learn, because we've seen it at the ASX, where they lost $250 million on an IT project that was predicted long ago would go bad. So I learned that. As I moved into the telco round for the T3 float, which the editor was very keen to be on top of that one, I suddenly realised that the depth and weight of regulation that is on so many critical industries in Australia. And really, I had to work so hard, John, to understand all of the underpinnings of the telecommunications industry. It was a really tricky one, and it helped me a lot, though, as I tried to cover the NBN and Telstra and Optus. And the big highlight of that was this American. Again, we had Bob Joss save Westpac. We had this guy, Sol Trujillo, come in from America, former telco executive over there, brought in to save Telstra. I don't know whether you came across him, but wow, he just was such a larger-than-life character. And he decided to go to war with the government. Did you follow that while you were at Perpetual?
Yes, I did, and had a couple of meetings. And he was certainly a colourful character for what is is a utility-like industry.
Yeah, but so that was good to see that T3 float get away, and I think you can realise there how much bankers can play an important role in a transaction, because they did a very nifty, partly paid stock with a fully franked dividend on top that I think had a yield of 14%. I mean, buying those first tranche of T3 was just a no-brainer, and it worked really well. But of course, while I was doing that, you were getting promoted again. You'd became the head of Australian equities, which I reckon at Perpetual, probably one of the most prestigious jobs in equity capital markets in Australia, certainly on the buy side. Can you tell us about that bull market between 2001 and 2008 before the global financial crisis, and perhaps some of your best and worst stock picks over that period?
We had a really good run in the mid-2000s, and then typically, because of the nature of our investment style, when things got really hot and frothy, we started to underperform quite badly. We'd been there before many times at high points in the cycle, but it doesn't mean that we felt any better about what we were doing. But we came out the other side in great shape just by dint of sticking to our game plan. We had some, and I can be guilty of talking about Rinker too often, which was probably our most celebrated win, but it was really, it fitted the way we thought about investing so well. It was a
cement maker, wasn't it?
Yeah, it was a
with global operations.
Yeah, it was spun out of CSR. It was considered to be the sort of runt of the litter, and it came onto the market with very little fanfare when it was spun out. But it had a terrific CEO. It was under-leveraged. It had strong market positions, and we built up a big position, and eventually had quite a role in pushing the Mexican acquirer Cemex to pay what was a pretty full price in hindsight. So that was a terrific win for our investors, but it wasn't as spectacularly bad on the other side. But it was a disappointing. And again, I've been forced to face this again in a couple of discussions in the last couple of weeks. APN News and Media, where I think we were emboldened by our efforts to push the acquirer of Rinker. We tried the same tactic on the private equity group that was bidding for APN News and Media, and they told us to go and get nicked. Then the GFC came, so the private equity bid evaporated, and we were left licking our wounds.
Now, of course, one of the greatest performing stocks of the bull market of the early 2000s was Perpetual itself. I think from the time you joined in 1994, where it was $5 or $7, it went up to $80 by 2007 with a phenomenal price-earnings multiple attached to it. Can you tell us how you see the active equities fund management transition to where we are today?
Yeah, well, the industry landscape has changed, and I guess the biggest drivers of that change are the growing importance of the big industry funds, which is where the money is. And 30 years ago, 20 years ago, they were giving external managers that money to manage, and over time, for a variety of reasons, from I guess general underperformance of many active equity managers to an increased focus on costs or lowering fees. There's been a profound shift to greater passive investing and the bigger funds taking more money in-house, managed by their own teams, which means the pie for active external managers has shrunk considerably over time. So you've got a lower size of the pie, lower fees, and so the landscape is quite profoundly different from when I started in the industry.
John, in 2011 you left Perpetual, and in 2012 you founded Airlie Funds Management with David Cooper. So this is really you going out on your own, and I suppose it predates all these structural changes in funds management that you just discussed. But tell us what led you to become a sort of entrepreneur and the owner of a business.
I don't think that's what that was really my aspiration. I loved investing. I'd had 17 years at Perpetual. It was time for me to go and do something different. As it turned out, I did the same thing, just in a different entity. And I'd worked with David Cooper at Perpetual. He'd raised my first institutional mandates with some industry funds in Melbourne. I thought he was we shared a lot of values and views. I loved working with Coops. He'd gone and run the Treasury Group, which was a umbrella funds management company listed on the exchange, and I think we'd always harboured a desire to work with each other again at some stage. So fortunate confluence of events. I'd finished at Perpetual, he'd finished at Treasury, and we decided to start Airlie together.
And what did the funds under management grew quite quickly? Where did it sort of peak out at?
It peaked out at around 10 billion.
Wow, that's impressive.
Well, look, we had a good start. We were generously funded, and we had a reasonably good early performance. So I think it certainly exceeded our expectations.
And did you benefit from those industry funds you mentioned earlier giving you mandates?
Well, I'd managed money for some of them for nearly 14, 15 years, and I described myself as like a pair of old slippers. They knew what they were getting, and they knew David was a incredibly capable business manager, and I think it was a relatively safe decision for them to make.
And so, John, Airlie was obviously very successful given that large amount of funds under management. But in 2018, you sold the business to Magellan Financial Group for $100 million, which sounds like a great deal. But what motivated you and your co-founder David Cooper to do that?
Well, we sat down David and I sat down after 5 years of being in business to do a review, where we're at, where we're going, what options did we have, what plans for growth. David had some views about the industry and the consolidation that was really accelerating. Compliance, costs, sort of regulatory burden had become, I guess, a bigger and bigger part of the business and probably more of a distraction from the day-to-day business of investing. So we thought that the right thing to do for the long-term resilience of the business was to become part of a bigger group that had scale in operations, that truly understood investing. So it wasn't an insurance company or a bank or a diversified financial. It was a pure funds manager. I'd known Chris Mackay, who was one of the founders of Magellan. We discussed this just theoretically over time. And long story short, we ended up becoming part of Magellan, who really fitted very neatly the criteria that we were looking for.
And you surrounded yourself with some pretty good people, which I think goes to your succession planning. So tell us about that.
Oh, look, you don't survive 30 years nearly 30 years in a very competitive industry without a lot of people enabling and helping along the way, from, all the great analysts and PMs I've worked with over time, people in operations who, they don't get the headlines, but they provide great comfort and support. So a lot of people have contributed. Obviously, the person who I've worked with most has been Matt Williams at 2 stints for nearly 25 years at Perpetual and Airlie, and he's been a terrific partner. He's an absolute A-grade investor. He's got a fantastic temperament. He's grounded, level-headed, and he's been just a wonder to work with over time. So I can leave Airlie knowing that the investing side of the business is in fantastic hands, and he's supported by a really motivated young team.
And unusual for funds management, you've got virtually gender balance, don't you, in the office? Is that right? Who's the other portfolio managers there?
Emma Fisher is Matt's deputy head of equities, and she's a fantastic investor in her own right. And she and Matt work incredibly well together, so they, as a team, will be. I've got every confidence they'll continue to do a good job.
And are you surprised at what's happened to Magellan over the last couple of years? I mean, it seemed to be just on a roll and headed for much greater things.
Yeah, look, I don't think anyone could have predicted that it would have got from where it was to where it is as quickly as it has. And I guess there are lots of lessons, but it was very, very dependent on an individual, and that's high risk, and particularly in an industry that has very high operational leverage. So it's certainly hasn't been an ideal. That's not an ideal formula.
Now, just to wrap up, I suppose, because your retirement is coming soon, could you just describe your style as an investment manager? And you mentioned earlier eclectic. Can you just give us some more insights into that? Is it? Do you like to sit down and look management in the eye